Welcome back. Amid the collapse of Silicon Valley Bank, several companies were caught in the crossfire. Streaming company Roku said it held 26% of its $1.9 billion in cash and was unsure what to extent it would be able to recover the funds. E-commerce platform Etsy also tangled in the downfall. Company has to begin processing seller payments throughout its other payment partners after warning of delays in the aftermath of SVB. Now joining us to discuss what happens next is Evercore ISI Managing Director Shweta Khajuria. Thank you for joining us here today. So big picture, I thought Roku might have gotten hammered for a bit more, but it looks like at least they have access to their deposits. Any word if they're able to access the funds? What's the situation on the ground there?
Well, first of all, thanks for having me. Second, it seems to us that initially when they filed their 8K, we thought that it would take months in terms of receiver certificates and expected dividends that they would get from the cash that they held at the bank. But now it seems that it could have been as early as yesterday, although we haven't heard that they received the full cash. We are speaking with them today, so we'll have more information intraday today as we speak with them. But what is for sure is that they will get the 26% of their cash that they had at Silicon Valley Bank. And the second thing also is that for the stock in itself, I mean, the stock didn't trade off that much, or in fact at all. The reason is because they do have enough cash for their day-to-day operations, at least for a year, if not longer, and they will have the remainder of the cash by that time.
So, Shweta, how should investors be thinking about this? For Roku specifically, is this a non-issue? Or even if their cash position is fine, are there questions that need to be asked about, making the decision to have a relatively big relationship with this one bank? How are you thinking about it?
Well, two things. One is that it is largely a non-issue as long as they get their cash back. And second is, it certainly now is a question of how to diversify, not only for Roku, but there were a lot of other private companies too that had all of their cash held at the bank. And so now there's an increasing awareness to diversify the cash pool across banks, just like you would with line of credit. You'd have several lenders. The same way now there's an increasing awareness for anyone who had a concentrated position of cash at a particular bank to diversify their positions. I would assume that Roku will diversify their cash position across different banks more than they did before.
And what about some of the other companies you're taking a look at here? Peloton had a little bit of exposure, maybe Etsy, looking like Trade Desk didn't really have any direct exposure. What's the status there?
So let's take one at a time. Etsy, not a meaningful exposure. They actually released another update saying that less than 1%, to be more specific, 0.5% of their sellers actually were impacted by SVB. And then over the weekend, they found an alternative route. So SVB was a so to speak, sweep account for them. And they found an alternative route to make sure that the payments were made to the sellers on time through a different payment provider. And so for as far as the first quarter goes and as far as the year goes, there's no change to the guidance for the quarter. They don't guide to the year. And they now have a workaround around SVB. They also had about $30 million in cash as of the end of last week at SVB, but now all depositors are going to have access at some point. And that cash is less than low single-digit percentage of their overall cash position. So for Etsy, it seems like in terms of making payments to their sellers as well as their access to the cash, they should be okay. Now let's take Peloton. It seems like a very modest to almost not meaningful exposure. They have less than $500,000 in cash at SVB. Most of it, or half of it, will be insured, and the other insured, they should have access. They also had a line of credit with them, which with the amended line of credit was not signed by Silicon Valley Bank. So really that they don't have much exposure at all. The stock had traded off, call it in the past 2 days after the ITC ban, as well as the Silicon Valley Bank news. But I think it is more of the retail trading than any of this noise created by news.
So I guess let's put Silicon Valley Bank aside then for these companies for right now, Shweta. But I do want to dig into Etsy in particular a little bit more because there has been some other negative sentiment around the company as of late. We had Citron Research issuing a short call on the company, talking about alleged counterfeiting or counterfeit merchandise is sold on the site. We had one of your peers in the analyst community downgrading the stock recently, throwing in the towel, concerned about buying trends. How do you feel overall about Etsy right now?
So we actually had a tactical underperform on the stock into the year. And we maintained our outperform rating. Basically, our call was that in the near term, we see macro headwinds, and we think that the stock will likely be range bound or lower. But long term, we think that this is a structurally strong asset. And we continue to hold our view. We don't have the underperform rating anymore, but I still believe that the stock will likely be range bound from here. It has underperformed year to date, and we think that macro headwinds will not be beneficial for Etsy. That said, if you are a long-term investor and not playing for the next 3 to 8 months, but you're more patient with, call it a 8 to 24 month time horizon, there could be a good buying opportunity for Etsy as a stock here because they have a great management team, great execution. When the macro turns around, they should be positioned to gain share in the overall e-commerce market. They have very healthy margins and very healthy free cash flow, almost all of their EBITDA to free cash flow conversion. And they have a potential for greater margin expansion going forward. And their overall outstanding diluted stock count in terms of number of shares outstanding hasn't changed that much. So in terms of free cash flow per share, it's actually an attractive entry point for somebody who is willing to be more patient. Near term, however, because of the macro challenges that we're facing, Etsy has an outsized exposure to discretionary spend with home furnishing, jewelry, and apparel being the top 3 categories. So there's no doubt they're going to have choppy waters to face here, but for patient investors, there could be opportunities here.
Interesting. Always a good reminder on time horizon when we're talking about this stuff, because it's not all created equal. Shweta, good to catch up with you. Shweta Khajuria, thanks for clarifying. It's very helpful to get your perspective on all this stuff. Evercore ISI Managing Director, Shweta Khajuria.